Hello again traders, Andrew Curry here, and if you haven't already done so, go to my website where you can sign up to my free trading newsletter. Now today I want to have a look at the dollar Canada, because what we've been seeing on a lot of pairs recently is a lot of consolidation, a lot of sideways movements, and one of the reasons for that is a lot of uncertainty because we've had a recent US election, uncertainty about the future economic policy, and there are several central banks which have to make interest rate decisions soon. So with all that in mind, there's a little bit of uncertainty. There's no real clear directional movement, and therefore we get a lot of sideways movement, which means we get consolidation, which means we get consolidation patterns, and there's been rather a lot of them recently. So I want to draw your attention here to, again, a bat pattern. We've been looking at bat patterns quite a lot recently. Here we have, if this is our X to A leg, okay, so X to A, we see a retracement which passes the 50% mark, but which doesn't hit or pass the 618. Therefore, we have an X to A, an A to B leg, and a bat pattern. Okay, we then have our B to C leg, and our deep completion point would be at the 886 retracement of X to A for a bat, which would put it there. And as you can see, at this particular time I'm recording that, we've already passed the D point. So let's just draw the triangles in here. So we've got it in. There we go. And again. Okay, so the reason I'm looking at a bat pattern again, because my recent videos I've shown different parts of the bat pattern, is this point here. If we look here at this is our X point, and just make it black rather than there so we don't confuse it with the stop. Okay, so our entry would of course be here. Well, let's make it blue for an entry, and I put stops at the 113 extension of X to A if I'm trading a Fibonacci pattern. There we go, and let's make it red for our stop loss. Okay, so the reason I want to draw attention to this is that the patterns can be more than just the patterns, as in decompletion point, aggressively, in this case sell, and play for this move here, the subsequent reversal at the decompletion point. Rather than necessarily doing that all the time, there are other ways in which we can use the Fibonacci patterns, or other things we can use to help our Fibonacci patterns. Some traders don't aggressively trade ciphers, bats, Gartleys, etc., the Fibonacci patterns. Rather than aggressively trade them, use them for confluence, as in when different things come together. So what we have here is we have a black line here, which is our high point. So if we switch to the daily and we scroll back here, what we can see is the market the dollar Canada hasn't actually hit this price point since April 2020. So it's been trading below that for some considerable time. And if we look and expand out at what actually was happening last time it hit, let's just expand this out. Okay, so you can see several examples of where it hit this point and didn't go any higher. Came close to hitting the point here, but didn't go any higher. Hit this point, didn't go any higher, these wicks, and in the opposite direction as well. There. And so there's another example of hits and didn't go any further, although it did break through on the next candle, and so on. Indicators that this may be a support and resistance level. So returning to the 4 hour, scroll across, back again. Here's our bat pattern. We've hit this point again for the first time in several years. We had a reversal and gave us our bat pattern in the meantime, and of course we're headed in this direction again we would probably expect that this is a point where we will hit resistance to the price going any higher. So therefore, our decompletion point came just a little before the point at which we would expect to see a movement in the bearish direction. What I'm getting at here is, rather than necessarily always trading patterns like the bat pattern aggressively, simply sell order at the decompletion point, we could perhaps look to see if bat patterns and other Fibonacci patterns have a higher positive expectancy where we see major support and resistance levels. In other words, two or more factors come together. Some traders stop aggressively trading these patterns and instead use them in their counter trend trading to say, we've hit this point, we would possibly expect a reversal at this point, and we have a Fibonacci pattern somewhere in the vicinity, which again, another indication of a counter trend move in the opposite direction. What I'm getting at is several factors coming together can indicate higher probability trades, rather than necessarily desperately wanting to trade all of the patterns that come, all of the moves we make, and do more trading. We can narrow down and see which are the higher probability trades more likely to hit our targets. Have a look through your results, your backtesting results and so on. There may be something here, depending on the pair that you're trading, which says trading patterns which also align with support and resistance points have a higher probability of hitting the target. Have a look.